Welcome back to the channel, and thank you for spending some of your time with me today. I'm Algabot, your guide through the world of automated trading systems for MetaTrader 5. In this video, we're taking a careful, educational look at an expert advisor called Cyber Cycle Turn Reversal. This strategy is built around John Ehlers Cyber Cycle, a clever filter that aims to isolate the natural rhythm hidden inside price movement. It follows a mean reversion style, looking to fade short-term extremes only once a turn has been confirmed. By the end, you'll understand how it thinks, how it enters, and how it manages risk. Let's get started. So what exactly does Cyber Cycle Turn Reversal do? At its heart, this expert advisor is a mean reversion strategy. Rather than chasing strong trends, it tries to identify moments when price has stretched to a short-term extreme and is beginning to rotate back toward its average. To do that, it leans on a tool developed by the engineer and trader John Ehlers, known as the Cyber Cycle. The Cyber Cycle is a recursive bandpass filter. In plain language, it's designed to strip away two things that make price hard to read: the slow underlying trend and the random noise that jitters from bar to bar. What's left is the cyclical component, the rhythmic swing that many liquid markets tend to show when they're rotating within a range. Because this filter reacts quickly, it aims to highlight turning points with very little lag. The raw cycle values are then normalized. The strategy divides them by the recent standard deviation of the cycle itself, which turns the output into a scale-free oscillator, roughly a z-score. This matters because it lets the same threshold settings work across different volatility conditions, instead of needing constant retuning. This particular expert advisor is designed for a single time frame, running on whatever chart period you attach it to. According to its notes, it is best suited to liquid, ranging, or rotational markets, with the euro versus US dollar on the 15-minute to 1-hour charts given as an example. It is therefore aimed at traders who are interested in counterswing, rotational setups rather than breakout or strong trend systems. As always, remember this is educational information only, and every trading approach carries the real possibility of loss. Let's walk through the mechanics step by step. First, the strategy only acts on completed bars. It uses a new bar check, so it waits patiently until a candle has fully closed before doing any calculation. This avoids reacting to the noise of a bar that is still forming. On each new bar, the EA rebuilds its picture of the market. It starts from the median price of each candle, the average of the high and the low. That series is passed through a 4-bar smoothing filter to gently reduce noise. Then comes the core engine, a 2-pole recursion, controlled by the alpha parameter, that produces the Cyber Cycle. A smaller alpha, with a default of 0.07, produces a longer, smoother cycle, while a larger value makes it shorter and more reactive. Next, the strategy normalizes that cycle. It measures the population standard deviation of the cycle over the norm period window, which defaults to 20 bars, and divides by it. The result is a scale-free oscillator that swings around zero. The EA then examines 3 recent readings: the newest completed value, the value 1 bar back, which it treats as a potential pivot, and the value 2 bars back. Now for the entry logic. For a long, the strategy looks for a confirmed trough. The pivot must sit below the negative entry threshold, which defaults to 1.2. At the same time, the newest reading must be higher than the pivot, and the pivot must be at or below the value before it. In other words, the cycle dipped into its lower extreme, stopped falling, and has just started to turn back up. That combination signals a long. The short side is the exact mirror, a confirmed peak above the positive threshold that has stopped rising and ticked back down signals a short. Requiring that confirmation is deliberate. By waiting for the cycle to actually turn, rather than acting the moment it crosses the extreme, the strategy aims to avoid stepping in while the cycle is still falling. Risk management is volatility-based. The EA calculates average true range by hand over the ATR period. The stop loss is placed at the ATR stop multiple times that range, defaulting to 2, and the take profit at the ATR target multiple, defaulting to 3. That gives a reward-to-risk shape of 3 to 2. Finally, if an opposite signal appears, the EA closes the existing position and flips to the other side. Let's look at the actual MetaQuotes language code that runs inside the expert advisor. At the top, we have the input parameters, the dials you can adjust in the settings. Alpha sets the cyber cycle smoothing constant. Entry threshold defines how far beyond the zero line a confirmed turn must occur. Norm period is the window used to normalize the cycle. Then we have the ATR period, the ATR stop multiple, and the ATR target multiple, which together shape the volatility-based stop and target, followed by lots for the order size. Below that are the two signal conditions. The long signal checks three things at once. The pivot value is below the negative entry threshold. The newest value is above the pivot, and the pivot is at or below the reading before it. That is a confirmed trough turning up. When it is true, the EA reads the ask price, sets the stop below the price by the ATR stop multiple times ATR, sets the take profit above by the ATR target multiple, and calls trade.buy. The short signal is the mirror image. The pivot must be above the positive threshold, the newest value below the pivot, and the pivot at or above the reading before it, a confirmed peak turning down. When that holds, the EA reads the bid price, places the stop above and the target below using the same ATR multiples, and calls trade.sell. Notice how both sides share the same structure, just reflected. This symmetry keeps the logic clean and easy to reason about as you study it. Now let's bring it all together on a chart. On screen you can see a series of candles, and below them a subpanel showing the normalized cyber cycle oscillator. The green band near the bottom marks the lower turn zone, below -1.2, and the red band near the top marks the upper turn zone, above +1.2. The oscillator swings between these extremes as price rotates. Watch how the oscillator, not the price alone, drives every decision. Let's begin with the long trade. In the opening candles, price is drifting lower and the oscillator is falling with it, sliding down from around the zero line toward the lower band. As price makes its dip, the oscillator pushes down into the green zone, moving below the -1.2 level. This is the extreme the strategy watches for, but notice that it does not act yet. Stepping in here would mean opposing a cycle that is still falling. On the next candle, the oscillator carves out its lowest point, forming a trough deep in the green zone. This is the potential pivot. Then, on the following candle, the oscillator ticks back upward, rising above that trough. That is the confirmation the strategy needs. The pivot sat below the negative threshold, it stopped falling, and it has just turned up. With all three conditions satisfied, the buy entry marker appears, and the EA opens a long position on the new bar. Immediately, risk is defined. The stop loss is placed below the entry at 2 times the average true range, and the take profit sits above at 3 times ATR, giving that 3-to-2 reward to risk shape. From here, price begins to recover. Candle by candle, it climbs off the low, and the oscillator rises back through the zero line. Price continues higher until it reaches the take profit target, and the long trade is closed for a gain in this illustration. Now watch the mirror image play out on the short side. As price keeps rising into the upper candles, the oscillator climbs with it, moving up through zero and pressing into the red zone above +1.2. Again, price is stretched to a short-term extreme, and again the strategy waits. On the highest candle, the oscillator forms a peak inside the red zone. This is the pivot for the short. On the very next candle, the oscillator ticks back down, falling away from that peak. The three conditions for a short are now met. The pivot was above the positive threshold, it stopped rising, and it has just turned lower. The sell entry marker appears, and the EA opens a short position. Once more, the stop and target are set by volatility, this time with the stop above the entry and the take profit below, using the same ATR multiples. Price then rolls over and begins to fall. The candles turn lower, the oscillator continues sliding back towards zero, and price works its way down to the take profit target below, where the short trade is closed in this example. Notice the rhythm of the whole sequence. In both trades, the strategy never chased the move. It waited for the cycle to reach an extreme, waited again for it to actually turn, and only then committed, with risk defined before the trade even began. That patience, acting on confirmation rather than prediction, is the core idea behind cyber cycle turn reversal. Of course, not every signal behaves this cleanly. In real markets, some turns fail and reverse against the position, which is exactly why the volatility-based stop loss is there to cap the risk on any single trade. And that brings us to the end of our look at the Cyber Cycle turned reversal expert advisor. Today we explored how it uses John Ehlers Cyber Cycle to isolate the market's rhythm, how it waits for a confirmed turn at an extreme before entering, and how it defines its stop loss and take profit using average true range. Remember, everything in this video is educational information only and not financial advice, a recommendation, or a solicitation to trade. Trading always carries the real risk of loss. If you found this breakdown helpful, please consider liking the video, subscribing for more MT5 strategy analyses, and leaving a comment with the strategy you'd like me to cover next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.